Sports card breakers and live sellers. The IRS knows that millions of dollars hit your bank account last year. Thankfully, there are ways that you can avoid taxes and not go to jail. I'm Johnny Petrucco. I specialize in helping sports card businesses save money on taxes and maximize their personal wealth. And I want to focus on the breakers, the live sellers, on Whatnot, Fanatics Live, all the way from beginning at $100,000 a year up to $1 million, $10 million a year, 50 to 100 million. As you know, there's a high volume in this business. Low margins, but high volume. So you have a lot of money coming into your bank account. Now, breaking has been around for around 20 years. Since 2020, it's exploded. And as we know, it started out with more selling wax, and now there's not many signs of slowing down. I'm going to cover briefly some of the major points when it comes to taxes for you breakers. You might want to reach out to me to just talk about your specific custom situation, especially if you're hitting 5 million, 10 million in sales. There's a lot of opportunity, a lot of possibility for missing those deductions. And the IRS knows, especially when you're dealing on these bigger platforms, what money you've made. So feel free to grab a spot in my calendar for a free consultation. I love to share these tax saving strategies and help you out. Many of you sell on these big platforms, Fanatics Live, Whatnot, eBay Live, etc. Now you've received a 1099-K. The third-party payment processing company calculates how much was given to you in that year. They send that to the government and they send you a copy. So now the government is waiting for you to report that amount. Check out this video if you want to learn more about the 1099s and how that works. But basically this means we need to have very good bookkeeping records. This means your sales have to be reported. So we need to put as many deductions as possible to reduce your taxable income. If you're live selling on Instagram or other means that are not through these big companies, technically you might not receive a 1099, especially if you're having payment through friends and family. Nevertheless, it is a sale and it is going through their platform. So although they won't give you a 1099 for friends and family transactions, this is a sale and it should also be included. Now, the largest deduction we can apply towards sales is cost of goods sold. You have the option of choosing a cash or accrual method. For the larger companies, an accrual method is even required if you make over 25 million. But for better reporting, you want an accrual method. Now, this will have a beginning inventory and an ending inventory. The cash method, you have the option to have 0 beginning and 0 ending. I've talked about this more in some other videos. Either way, it's crucial, right, to have the good records and to track those purchases through your bookkeeping system and through a spreadsheet. For my bigger companies, an inventory software is very helpful. Another point to consider with cost of goods are consignment deals. Over the past few years, we've seen more repackers, right? And a quick way to do that is having a consigner. Typically, you can just take the payment you send to the consigner as straight cost of goods. But tracking this in the right way is very important so you don't miss out. It's very important so you don't miss out on the proper deduction. I think I'll cover 3 more general topics for now. I'm just hitting the brief highlights. Again, please reach out to me if you'd like to have a call. I'd be happy to talk to you. Sales tax. Thankfully, these bigger platforms take care of sales tax for you. This was because of some law that was put into place in 2018. Sales tax has become a little easier with bigger marketplaces. However, what about your own website and selling through Shopify or some other WooCommerce website that you don't have a marketplace? Do you need to collect sales tax or not? Well, this depends if you have something called nexus in that state. Sales tax is pretty crazy. Every state has different rules, different tax rates, different processes, and all the above. So you might have to collect sales tax in one state and not the other. You are required to collect and remit sales tax in a state if you have physical or economic nexus. Physical nexus, you live there, your business operates, and if you make a sale in that state, you should collect sales tax. If you have an economic nexus, this means the rule is actually different for most states. So there's a website where you can look at this chart and it tells you the economic nexus per state. But in general, most states have a minimum of $100,000. So if you sold $100,000 to people who live in that state through your own website, you're supposed to collect sales tax. And eventually they find out, I've heard of a situation like this, and they had to back pay sales tax for the past year because they weren't collecting it. And the state figured out that it was over that $100,000 and that company got in trouble. For this kind of stuff, it's usually easier to use third-party software such as Avalara, and they take care of all those details. There's state tax filings you need to do monthly in multiple states. It can be quite confusing. So this is important to outsource if you have your own website. Okay, that might not be relevant for everyone, but this one is payroll. Now that you're a growing, breaking business, you have employees, you have contractors. So there's a difference there. Employees, you have to pay the payroll tax and unemployment. For contractors, you're just paying a flat rate and they have to handle that payroll tax. But it's very important to set this up correctly. That's why usually we should be using payroll software. I mean, I can manually file payroll tax forms. Every quarter, there's a 941 form. At the end of the year, a 940 and the W-2s. But using something like ADP, Gusto, QuickBooks Payroll. In fact, Gusto is my top choice. There's Paychex and Paylocity, Rippling, all these companies. Gusto, to me, seems to best integrate with QuickBooks and is the best price for small businesses. Their support is incredible. So they help take care of a lot of these issues. Keep in mind, unemployment insurance. There's multiple things to just stay compliant with payroll. The last point is becoming an S corporation. If you're making at least $50,000 profit, it's a good time to consider an S corporation. If you have partners in your business, by default, you will be taxed at a partnership, and the profit from the business will flow through to both partners depending on your percentage owned. But there's not a tax benefit when it comes to payroll tax for partnerships. As an S corporation, you can have multiple members and owners have that income, that profit flow through, but you do get the benefit of a reduced self-employment tax. I have another video here explaining S Corps, but in general, most of you probably need to be S Corps if you are not already. Now there's a whole process of filing forms to become an S Corp. Now you have payroll, which you already probably have established, but there are some other benefits as an S Corp owner. We can add in your health insurance, HSA, and these are all deductions. So maybe you pulled in $200,000, $400,000 in profit last year, and you're not yet an S Corporation. Wow, there's some major savings that you can employ. The S Corporation has initially the self-employment 15% tax that is largely eliminated, but there are so many other different tax advantages you can take once you become the S Corp. So reach out again. I'd be happy to talk to you and help out. And at Sports Car Tax Guy, I'm helping my clients trade their IRS stress for financial success. Talk to you soon.